Thanks everyone for coming back to our next edition of Econ Talks. Gareth, the latest housing numbers, wowee, they are just continuing to rocket only further upwards. We saw house price inflation across the country, according to the REINZ House Price Index, up, 30% per annum. Now, those sort of numbers, that's the point where as economists, we check our spreadsheets a few times to make sure we're not doing something dumb, or that we're not coming off a low base of operations. And let's be clear, that isn't really true. You know, we're just seeing these stonking hot numbers. I mean, what's going on here?
Yeah, I mean, those numbers are crazy. I mean, I looked through some of the regions, and Manawatu Wanganui going at 52%. It's a sort of number which I have seen in house price spreadsheets before, but usually it's for some little area where there's probably only 5 house sales through the month, like Kawara or Wairoa. So the fact that it's a region with 250 odd thousand people and the housing market is going that hot is just phenomenal. I mean, interestingly, while prices are accelerating still, sales just dropping off the last couple of months. And so there is a little bit of a sense that we're seeing fewer investors in the market. And that, look, lines up with anecdotes that we've heard across the housing market. But what we're not seeing at this stage is any effect on house price inflation. What's most one aspect of that, firstly, it does take time for trends in sales to flow through into slower house price growth. So not too uncomfortable in that respect. It could take 3-6 months for those price numbers to start slowing in normal times. But what really concerns me is the fact that the stock of houses available for sale is at such an incredibly low level. You're talking about 14,500 houses nationwide currently sitting on real estate agents' books. That's equivalent to less than 8 weeks of sales. And if we look back over the last 14 years or so of data that we've got, typically you're talking up towards around about 4 months. So 2 to 3 times what we've got on hand at the moment. Now, if there's no houses for sale out there, even if you're getting fewer buyers on the market, it could well be that supply is still just not meeting demand. And that, of course, is a recipe for house prices to continue pushing up rather than slowing as we might normally have expected.
But I guess why don't we have these houses available? Why are stocks so low? I mean, house prices being this high, generally speaking, should be bringing people into the market, because man, you can make bank at the moment on housing. It earned more than most people, including myself, made last year, just in one single house. So I mean, this is the sort of place where you would have been expecting sales volumes to increase, not only because of those high prices, but also if we were going to see highly leveraged investors or anyone else starting to sell up, well, their sales are going to pop through in the numbers. But we haven't really seen any of that. I mean, how long could this continue with such a lack of supply coming on board?
I think that's the big question. I mean, let's put aside owner-occupiers for a moment, because while they might have made a lot of money on their house, if they're going to have to purchase another one from selling, then they're still buying and selling in the same market. So let's put them out of the equation. But thinking about investors, typically, if you are getting house prices that have risen 20% or 30%, investors will go, oh, that's pretty, I've made a lot of money there. Maybe the house price will start heading in the other direction. I'll cash up and go and, explore other investment options. We're not seeing that at the moment. One, probably because there's not a lot of other investment options that are going to give you much of a return out there, particularly your money in the bank where the interest rates are barely above zero still. But there's also questions I have about the bright line test that was extended out to 5 years in 2018. Any investor who's bought a property in the last 2 or 3 years since that change came in, they're probably looking at that and going, yes, it's made lots of money, but I don't want to have to pay a third of that or more in tax to the government. So I'm going to take my chances and hold it for another couple of years on the basis that it might keep going up. Probably at worst, it's going to go sideways. So, you're going to try and avoid that tax bill. So we could be seeing some of those, I guess, unintended consequences of government policy coming through, which mean that the recipe is there potentially for those prices to continue going. And if we're talking out into 2023, well, it's still 2 years away before that liquidity issue starts to be resolved.
Yeah, absolutely. I mean, given just the crazy height of house prices at the moment, the government is still keen to do as much as it can in some regards and unwilling to make other changes when it comes to the housing market. After quite a few attempts and a few cracks, the Reserve Bank's finally got an in-principle decision, at least from the Finance Minister, to look at introducing debt-to-income limitations across lending. Big focus there in terms of making sure they are skewed towards investors and that first home buyers are kept out of the mix as much as possible. But I think it's also a challenging tightrope for the Reserve Bank to walk on these DTIs, to be fair, Gareth, because they're meant, in a sense, to limit the potential for mortgage losses or people to have to default on their mortgages, because if interest rates go up, they might not be able to sort of pay up, or if they lose their jobs or similar. But if you're going to set them at such a rate that first home buyers are exempt, given the very heavy heat in the market, you're almost having to make that case, well, look, we'd be happy to see mortgage defaults from first home buyers if it helps more people get into the market. And I guess that's the challenging thing. The Reserve Bank is not responsible for house prices in terms of it's looking at much wider issues around full employment, around inflation outlook, around macroprudential financial stability settings. But it is having to walk this tightrope of doing some of the government's work for it because the government's not willing to take up that mantle itself. I mean, all of these different changes, there's so much in the market at the moment. I get that the housing market's frothy, but surely this causes or could cause even further, unintended consequences if we continue to have these different changes piled on.
Yeah, I mean, you're right. There is a lot going on. And I think, I mean, you look at the borrowing numbers, first home buyers would tend to be more exposed than any other category of buyer in terms of how leveraged they are and how much they're having to borrow potentially relative to their incomes as well. I guess the research that the Reserve Bank tends to look at suggests that historically investors of any category are more likely to default because they don't have the same sort of, I guess, almost emotional connection to their house they're living in, they want to stay in, which you see with an owner occupier. But yeah, there's a hell of a lot going on in the housing market, and the risk is we keep piling on change after change in quick succession and not really giving a chance for some of those policy changes to be worked through and see how they come out. And it's getting increasingly messy, I think, trying to work out, well, what is effective and what's not effective when you're making so many changes at once.
Absolutely, but I think even with all of these changes coming through, it seems very tough to expect that house prices will all of a sudden become sustainable, affordable, or anything like that. It's more trying to stop the runaway freight train than actually trying to bring it back to the station, in a sense. So we're still going to see these issues, I think, over the next few years. It's just how crazy from here do they get, or do we eventually see that pace of activity slow down towards more normal, if you will, levels? Again, not affordable, just not quite as crazy hit. And I'm sure we'll assess where those house prices go, what all of that means for interest rates, what interest rates themselves are doing in the market, and whether or not the government takes any more action on one of our future editions of Econ Talks.